Hello there, traders around the world. This is Mohammed Kande coming at you with another video. I want to talk to you guys about trend, right? What is trend? How do you trade trend? How do you identify trend, right? So first things first, what is trend, right? Trend itself is a general direction in which something is developing or changing, right? Up, down, side to side, whichever way. You just want to be able to get into the trend. So let's take a look at it right here. So this is how I identify the trend. This is how we identify the trend at Forex Executives, okay? So if you guys take a look right here, the market is printing higher highs and higher lows. That lets me know that we are in an uptrend. And then what happens over here? The market prints a lower high, a lower low, a lower high, a lower low, right? And this is the beautiful thing, right? You know about understanding. When you understand that, one, it allows you to catch trades at the beginning of the trend, which allows you, if you're a swing trader like myself, to get hundreds and hundreds and hundreds of pips on a trade, and it makes life absolutely easy. Because as a swing trader, less is more. I don't have to take 15, 20, 30 positions like a scalper does. Excuse me, I don't have to take 100 trades a month as a swing trader. I take 4 to 5 trades a week and I'm good. Because on average, I'm going to average about 150 to 200 pips per trade on my good trades. On average loss, I'm going to lose about 35 to 55 pips. You guys can see, right? Even someone like myself with a 40% winning ratio, I can still be profitable because my wins are 3-4 times my losses. And that's what I absolutely love about swing trading. And that's why trend trading is absolutely amazing as a swinger, right? When you swing, the trend is your friend and you absolutely love it, right? So if you guys take a look right here, I was marking up the area where market had been going up in a trend, right? And then that ended abruptly when the market pulled down, pulled back up, impulse leg, right? Came back down, pulled back, came back down, and it was rejected again. So the market is rejected around structure. And then all of a sudden the market retraces back to not a 50% retracement, actually deeper than that. It did like a 45% retracement, right? And then the market started longing again. I believe that now this trend is going to be reversed and we are going to be in an uptrend. And the reason why is because the downtrend was abrupted by this huge rejection candle on the monthly chart. My trend line on the monthly has been breached, right? So I have 2 reasons to know that we may have a trend reversal, right? Now, let me show you guys what I have. This is my 10 and 20 EMAs, right? And this is absolutely amazing, okay? So if you guys look right here, when the EMAs cross, the trend is getting ready to go, all right? So if you guys take a look right here, the market had been in a downtrend for a very long time. The EMAs crossed, and look at what happened. Market absolutely took off, right? What are EMAs? Right? I know, a few people are probably asking themselves, what are EMAs? EMAs are exponential moving averages, right? I like to call them exponential weighted moving averages. They move a lot faster than simple moving average. They react a lot faster to recent price change. That's why I absolutely love them. I use the 10 and 20 from the monthly to the daily, and anything below the daily, I use the 40 and the 110. All right, and the reason why is because it's telling you it's an interval, okay, 10 and 20. So on my daily chart, I like to use the 10 and 20 EMAs to kind of help me out with my direction. So on the monthly right here, if you guys take a look, the market crossed over right here, and what did the market do? Respects the trend line and go, right? Shoots all the way down. And now we started a little uptrend right here, and then the market started to do some sideways action, right? Lets me know that the market is consolidating, right? Or the market is ranging, not necessarily consolidating, but the market is ranging because you have higher highs and higher lows and lower highs and lower lows being created, but the market is stuck within a particular area. So I know that the market is ranging, right? But this downtrend right here might have been abruptly stopped by this candle that's forming right here. That's 1. 2. Let me go to my weekly chart. All right, if you guys take a look right here, trend is your friend, right? The trend is your friend. So if you guys take a look, the market crossed over right here, right? That was the first cross. Came back, crossed over again, and then as you can see, as price begin to go down lower, you're going to see these EMAs expanding to confirm the trend, right? So we were in a downtrend, right? And then now, the reason why I think that this uptrend might be starting now is because this bullish candle right here broke above the EMA. So when this breaks and closes above the EMA, that lets me know that we may have a trend change. We may be in an uptrend now. That's one. Two, my trend line. If I draw up my trend line right here, right? Let me draw up my trend line over here. If I draw up my trend line and make sure I touch. You're not supposed to cut any candles when you draw your trend line. I draw my trend line on a weekly, right? Market kind of broke above, right? It came and tapped it right here, and now it's breaking above it this week. That's one. Now let me go down to the daily. The lower, so remember guys, if you guys watched my previous video when I was doing my analysis on Great British Pound Japanese Yen, I was telling you guys about doing your analysis from the monthly to the daily, and then the trends. When the trend begin to change, you're gonna see it first. Where you're gonna see it first on a lower time frame. So if you guys see, we were in a downtrend right here, and then that got stopped, right? EMAs just crossed over here, right? Market went up, market came back to retest the EMAs and retest this 50% retracement of the fib, and then the market pushed up, and now the EMAs are beginning to spread. Not only that, but market broke my trend line, retested my trend line, and now we are looking like we are going to be in an uptrend. So this is me gathering information. This is me putting together my my detective hat and getting as much information as possible to take a trade. And it's that simple. And that is the only thing that I use the EMAs for. I don't use them for anything else. Just a direction. It allows me to see direction. It allows me to catch direction very, very early. And that's how I'm able to get hundreds and hundreds and hundreds of pips into the market, okay? So if you guys take a look right here, market broke, trend line, pulled back, and now we're looking for the market to continue up. And that is substantiated by structure, right? Market hasn't broken the structure area. Broke above structure, one. Two, my EMAs just crossed over on the daily. They crossed over on the 28th of August, right? My EMAs crossed over a month ago when they went ahead above the EMAs, went above, came back to retest it, held, and now it's riding the EMA kind of. If you guys see, the market rides the EMA, right? It respects the EMA. And if you guys, I'm going to go to the H4 just so you guys see it a little bit better. But if you guys take a look right here, the market broke it over here, right? Came back into it, never broke it, right? Broke it a little bit, but never, it got rejected every single time it pulled deep into the EMAs. And this is how I'm able to catch these ridiculous entries where I'm only risking 20 to 30 to 35 pips, right? Because I use structure, my EMAs, and my fib levels to catch the market at a good structural area to take the trade. That's it. Catch the market at a nice structural area, take the trade, and make it happen every single time. So that's all I have about trend. Any questions that you guys have, do not hesitate to ask. I'm here for you. Happy trading, guys.